Hello, I'm Rondrick Williamson, your host for Perspectives. It's no secret that everyone has been affected by the downward spiral of the economy. According to the U.S. Unemployment Extension News, as of June 2010, more than 15 million Americans were out of work. Even though the economy is trying to recover, we're still feeling the pinch of the rising gas and food prices. So is it possible to recover from these financial setbacks? The answer is yes. And today we'll show you how to take charge of your finances. We'll be right back. Joining us today is Gary Bechtel from Atlantic Southern Bank. We're going to talk to him about financial management. Gary, tell us, I know in today's society, the economy has been hit hard, everybody's struggling. What are some good tips we can do to get over this financial crunch?
Well, I think that individually you're going to have to look at what your income, evaluate your debts, manage your credit score, and try to, and I know from my own personal perspective in dealing with customers, is try to save money. And the rates and CD rates and things like that are not paying a lot. But I think with the uncertainty as relates to gas prices, employment, things like that, I think people are, it's necessary for folks to put some money away in case struggles come up. And that's a simple answer, but I think if you look at the savings rate, that has basically gone from around 1.5%, 2%, it's gone up to over close to 5 and over. So people are reacting by saving money, by trying to eliminate their debt, and especially their credit card and their consumer debt. And as a result, they're saving money and preparing for a rainy day.
Right. Now, you mentioned credit. I know because the economy has been bad, some have gone from good credit to poor credit. What are some things that individuals can do to repair their credit or to make themselves more credit worthy?
Well, they can evaluate their own personal circumstance. They need to know what their debts are. They need to go and pull a free credit report. The government says you can pull one every year. There are certain sites you can go to. The ones they advertise on television are with the catchy jingle and everything. Those are pay sites.
Right.
And if you pull a credit report off there, they're going to basically hit you for a fee. But there are free credit reports. Now, those are not residential mortgage reports, things like that that can be used by banks, but it gives you an overview of where you are. And you just need to look, you need to see if you got late payments, you need to see what your total debt is, and then design a game plan. Say, you know, if you're bringing in $3,000 a month, for example, and your debts are $3,500 a month, you know, you need to figure out a plan. You maybe call your creditors, find out if you can lower the interest rate or pay a partial payment or something like that. But you don't need to be afraid of what it's going to show you. The fear needs to leave. You need to evaluate and say, I've got to take command. So in order to do that, you got to know everything that's on that credit report, what everybody has evaluated you in past transactions, and just get the fear out of your mind that it's going to show something that you may not want to see.
You know, I think more often than not, individuals don't even know what's on their credit report.
That's correct. I agree.
So I think sometimes when the credit report is pulled, you're amazed at the number of items.
Sitting there with your fingers crossed going, you know, what is it going to show? And so you need, I mean, if you're paying your bills on time, you should have a good idea of what debt you have.
Sure.
If, for example, you've gotten behind on certain things, that's when you don't know oftentimes what the creditors hit you with, whether they've got judgments or liens against your credit, and people just need to go get over the fear, pull a credit through that site, or go to your bank, or go to go to a housing counseling center of some type if you've got issues with your mortgage, and just you know, bite the bullet and get it done. And because you cannot work on your issues if you don't know if you don't have the proper information.
Right. So for our viewers on today, what would be a good target number to say you have good credit or decent credit?
Well, you know, I've been in and around the mortgage business for a long time, so I'm real familiar with. If you're the best, your credit goes from 450 to 850. 450 being the worst, 850 being the best, and 850 is, you know, I don't, you know, nobody has 850,
Right.
and so above 700 is a target. Above 720 is you get the best rates, you get the best terms, everything. Above 720. Now, if you're struggling with it, you just have to say, I need to be at 650, I need to be at 680, because if you want to borrow money, you may pay a little more in rate, but you can still borrow money at 650, 680. If you're below 600, you're not going to be looked upon very favorably by
Right.
lenders of any type, auto lenders, especially home lenders, or even credit cards, because you'll get rates that are not worth
Astronomical,
taking.
right?
Yeah,
Out of this world. Let's-
confiscatory rates.
Let me piggyback on credit cards. I've had this conversation with several friends, and the issue always comes up. If you have a credit card, when the bill comes that month, is it okay to pay just the minimum, or is it best to pay more than the minimum, or is it best to pay the whole balance? In order to get your credit?
If you can pay the whole balance, pay the whole balance, but don't pay the whole balance despite other bills. I mean, don't say, you know, you got 5 bills, I'm going to pay the whole balance one month on another one. I'm not. You know, listen, if you can only pay the minimum, pay the minimum.
And that will look favorable still if you just pay the minimum.
Right,
on your credit.
you will not show lates. You'll get hit with additional interest, not additional interest, but it will gather up quicker.
Right.
If you pay more than the minimum, that's looked upon favorably as well. The rule is really for credit scores. For example, if you have a $10,000 credit limit, if you have under $3,500 balance on your credit card, that you'll get benefit of that on your score, because what they want to see is that you have available credit and you manage what you have. So if you've got the willpower and the strength to stay at 35% of your total available credit, that's looked upon very favorably. So, but if all you can pay is the minimum, and you're putting other debts off, pay the minimum, but pay them all.
Right.
You know, pay them all. But you need to prioritize. The mortgage comes first.
Okay.
If you have a mortgage, pay your mortgage first, because you need a home to live in.
Right.
And a lot of people get kind of waylaid by they say the mortgage is too much, I'll pay these others. No, let the others go, pay the mortgage. Because you don't want to be, once you're foreclosed, it's as long as 5 years before you can buy another house, and then you go become a renter. If that's what you want, that's fine. But if you want to buy another house, do not be foreclosed on.
Now, that leads right into my
Sure.
next question. You know, a lot of individuals have experienced foreclosure in the last couple years.
Yeah.
How can one recover from that and move forward?
Well, if you have to go through a foreclosure again, it's going to be 60 months, 5 years once the foreclosure is completed. For example, if it's in Bibb County, it's got to be you're foreclosed on, you're kicked out of the home, and then the county has to confirm the foreclosure, and it has to be sold or taken back by the bank. And at that point, from that point, it runs 60 months. So it's not 60
process.
Yeah, it's a long process. And on FHA, I think you can go back in at 36, but the rule is 60 months. And you're just going to become a renter at that point. And there's a lot of homes for rent. I mean, it's not a bad thing, but it does you are going to be out of the home buying market for a period of time if you're foreclosed on. But I mean, it's something that a lot of people cannot avoid due to the unemployment, due to illness, due to health care, due to things like that. And you know, thank goodness we don't have a debtor's prison.
Right.
I mean, you suffer the pains of the foreclosure, but you know, I've seen a lot of people survive and get by, but you've got to. It's painful.
Yeah.
It is very painful. I've seen a lot of good people go through it.
Yeah, but prior to getting to the point where foreclosure is necessary, I'm sure there are plans that the individual lenders have in place nowadays to try to prevent foreclosure.
Well, the thing is, you've got to call them when you see yourself getting behind 30 days. Normally, you need to reach out to your. And what you do, you reach out. In this business, all these loans are sold to Fannie Mae or Freddie Mac, which we've heard, you know, they hold all the notes. And what they do, they sell the servicing for a small percentage of it. And so there's multiple servicers all over the country. So the people that sell the bill, that send the bills out, collect the money, everything are servicers. That's who you've got to contact first. So if you're getting your bill from ABC company and they give you a phone number, that's who you need to contact, because that's where you're going to get the first help immediately. They're going to then turn you over to somebody in Workout in their organization. You'll talk to them and say, listen, I can't make the payment on a regular basis that I've agreed to, but I'm only 30 days behind. What do I need to do to maybe work this out? And usually they'll want you to send do a personal financial statement. They'll want you to give them indication of what your income is. They want to know what your debts are, things like that. And you know, they should work with you. There's no promise that they will. There's been a lot of horror stories about the program that the administration put in place that did not work, because oftentimes it's not in the lender's best interest to work to reduce the principal, to reduce the interest, because they gain fees off of it.
Right.
So, I mean, the program, the intentions were good. The execution of it and some of the details did not work, I think, as the administration had hoped it would.
So I guess the take-home message is, if you find yourself in a situation where you
face the facts and reach out. Reach out. There's a housing counseling center, Home First, in the community that people can go to. Reginald Bell is the executive director. They've got people that can help you. They can reach out to your creditors. They can negotiate sometimes a resolution to your problem. But if you're 120 days down or 180 days down, it's too far. The companies usually the lenders already in place, putting in place the foreclosure. They could possibly do a forbearance of some type where they put the interest on the back. They sort of capitalize the interest, but you've got to come to terms with it quickly. You can't if that bill comes every month, you can't put it in the drawer.
You can't just sit on it.
You cannot sit on it and hope that it goes away, because it ain't going away.
Of course.
They will. They may not come after you right away, but they're going to get you eventually.
They are eventually.
Because I've taught classes on how to manage credit and how to get ready to buy a home, and you've got to remember that every dot, dash, signature, everything is on a database somewhere. So everybody knows what you've done financially, and they pull your credit, they report everything. So you can run, but you cannot hide.
Yeah. Wow.
And people just have to get over and it's a prideful thing.
Of course it is.
Yeah. You just got to be honest with yourself and say, I didn't get into this yesterday. I'm not going to get out of it tomorrow, but I've got to bite the bullet, face the facts, and start working on things.
Wow.